Bitcoin. Se habla de bitcoins en los medios, se habla de bitcoins todo el tiempo. No sabemos bien qué son los bitcoins, pero ya hay gente que lo pondera como una especie de alternativa monetaria. ¿Vos creés que es posible en Argentina esa discusión?
A ver, ¿cuál es el punto? El punto es que lo primero que hay que comprender.
And that, ladies and gentlemen, was Argentina's Bitcoin friendly presidential candidate, Javier Milei. He won the election in Argentina that just ended tonight, a little earlier tonight. All right. Javier Milei, Bitcoin friendly candidate, has officially won Argentina's presidential election, defeating his opponent, Sergio Massa, by 2,786,450 votes. Set to take office on December 10th, Milei while not explicitly endorsing Bitcoin as legal tender or a reserve asset, plans to replace the Argentine peso with the US dollar. The Argentine peso recently experienced hyperinflation, reaching 143%, prompting the need for economic reform. Milei has been vocal in his criticism of central banking, referring to it as a scam, and praising Bitcoin for preventing politicians from exploiting inflation. While the future of Bitcoin in Argentina is uncertain, Milei's presidency will signal a step towards the country's adopting of Bitcoin, following the example of El Salvador. Expect some crypto companies to fail in the wake of Bitcoin's halving. As Bitcoin approaches its halving in April, companies in the crypto space are at a critical juncture with a historical event known to trickle significant market shifts. While the halving typically leads to increased market activity, the businesses must balance opportunities with a long-term perspective to avoid strategic errors. Recent layoffs of Avalanche underscore the sector's volatility, emphasizing the need for robust risk management. Companies are focusing on product development and halting marketing to diversify offerings and build a foundation for sustainable growth post-halving. However, rushing product releases without cybersecurity preparations poses a risk. The venture capital landscape is complex, with renewed interest requiring cautious expansion backed by solid financial planning. Setting realistic expectations for the halving's impact is crucial to maintain credibility, and adapting to the rapidly changing regulatory landscape is essential for success in the evolving crypto market. He lost 200,000 when FTX imploded last year. He's still waiting to get it back. A year after losing over 200,000 in the collapse of cryptocurrency exchange FTX, victim Jake Thacker is still unable to recover his funds. FTX founder Sam Bankman-Fried was recently convicted of fraud and money laundering, facing potential life imprisonment. Despite this, victims like Thacker are uncertain about their chances of reclaiming their losses as bankruptcy proceedings continue. Thacker, who experienced job loss and bankruptcy after FTX explosion, expresses frustration with the slow, opaque claims process, fearing a diminishing recovery pot the longer it takes. Although the guilty verdict brought some satisfaction, victims remain financially unsettled, hoping for eventual restitution as they navigate the aftermath of FTX's downfall. Ramaswamy swears crypto plan, making him the only GOP candidate who has one. Republican presidential candidate Vivek Ramaswamy has unveiled a comprehensive crypto plan that differentiates him from other GOP contenders. The plan involves firing most of U.S. Securities and Exchange Commission employees, reducing the federal government workforce by 50%, and establishing a clear regulatory structure for cryptocurrencies, considering most tokens as commodities. Ramaswamy emphasizes protecting the rights of software developers, supporting the First Amendment freedom to code without facing legal repercussions. He also advocates for the preservation of self-hosted digital wallets outside of regulatory reach, and aims to provide clarity on how the government treats new virtual assets. Despite potential challenges in implementing his ambitious agenda, Ramaswamy's plan positions him as a candidate strongly supportive of crypto innovation. Yearn Finance token tumbles 43%, community speculates on exit scam. Yearn Finance governance token YFI experienced a sharp 43% decline within 5 hours on November 18th, following a notable 170% rally earlier in the month. The sudden drop, wiping out over $300 million in market capitalization from November's gains, has sparked concerns within the crypto community about a potential exit scam. Some community members in social media, including X, formerly known as Twitter, speculated that 50% of the token supply was held in 10 wallets controlled by developers. through Etherscan data suggests the development of crypto exchange wallets. Others noticed a surge in YFI short positions potentially contributed to the sell-off. Despite the decline, YFI remains 83% higher over the past 30 days, with traders emphasizing mixed views on the nature of the price movement and its association with the exit scam. Yearn Finance, a decentralized finance protocol launched by Ethereum developer Andre Cognier in July 2020, has not provided immediate response for inquiries regarding the situation. JP Morgan implores fund tokenization for personalized portfolio management. JP Morgan and Apollo, in a collaboration with blockchain firms, have conducted a proof of concept to demonstrate how asset managers can tokenize funds using their preferred blockchain. The innovative part of Project Guardian, led by the Monetary Authority of Singapore, explore the potential of blockchain for managing client portfolios, executing trades, and facilitating automatic portfolio management for tokenized financial assets. The demonstration showcased the ability of wealth managers to acquire and rebalance positions in tokenized assets across different blockchain networks. Notable collaborators were Alexar, Oasis Pro, Provenance Blockchain, Layer 0, Ava Labs, Biconomy, and Wisdom Tree. Our goal is to create solutions that bring significant efficiencies and enable better outcomes for asset and wealth managers and investors throughout personalized, highly scalable portfolios, regardless of asset class or what the assets are managed or recorded, said Tyrone Lobin, head of Onyx Digital Assets. Successfully delivering the solutions for portfolio rebalancing is a critical step in the evolution of traditional asset management functions, said Pat LaVecchia, CEO of Oasis Pro. This next generation of technology will increase speed and efficiency across legacy systems. Additionally, Anthony Morrow, Provenance Blockchain CEO, noted in the release that JP Morgan's initiative is believed to be the first blockchain interoperability solution for institutional financial services. This development aligns with the increasing interest shown by several traditional financial institutions in the blockchain industry. Earlier in the year, Charles Schwab, Citadel Securities, Fidelity Investments announced the launch of the cryptocurrency exchange EDX Markets. Solana's blockchain games thrive on Epic Games Store. Is it the next big thing? The surge in Solana's native token value over the past month has coincided with substantial growth in Web3 games on the Solana blockchain. According to Game 7's 2023 State of Web3 Gaming Report, the number of crypto games on the Epic Games Store has increased from 10 in January to 69 in October. Solana currently hosts over 125 games in its ecosystem, positioning as the fourth most popular blockchain network for game developers and the leading non-EVM chain. These games span diverse genres from sci-fi, MMOR, M-morphs like Star Atlas to fantasy RPGs like Aurora. Despite challenges faced by some studios, such as layoffs, the Solana blockchain continues to attract major games like Yaku, a social metaverse game, and Chain Crisis, and cyberpunk dystopian shooter. Angelic, a sci-fi RPG, raised $10 million for development and emphasizes a commitment to avoid pay-to-win or play-to-earn mechanics, considering them toxic and unsustainable. The success of Solana-based games on the Epic Games Store underscores the blockchain's growing influence on the gaming industry. Fidelity wants to create an ETF, joining BlackRock in doubling down on crypto. Fidelity, a major player in money management, has filed for the creation of the exchange-traded fund, ETF, that would hold Ethereum's Ether. The proposed Fidelity Ethereum fund is intended to be listed on the exchange owned by Cboe Global Markets, as per a filing that disclosed this product's existence. The U.S. Securities and Exchange Commission must grant approval for the Ether ETF to trade, a decision that is pending and is also relevant to other applications, including one from BlackRock. Both Fidelity and BlackRock are seeking to introduce ETFs that provide investors with easier access to major cryptocurrencies like Bitcoin. The potential approval of ETFs holding Bitcoin and ETH, the two largest cryptocurrencies, has the potential to significantly impact the crypto market, making digital assets more accessible to a broader investor base through conventional brokerage markets. And we have here, Boo on Moo Blockchain says, BitGo CEO Mike Belshi says that despite industry-wide optimism, the US SEC is likely to reject spot BQ and ETF applications Because Coinbase is not completely separate as an exchange in custody, and Coinbase is selected as the host of many ETFs custody partners, and Coinbase has a lot of risks that are not understood. Now let's listen to what he said in his own words.
Through the notes you sent across to us, and you're talking about BitGo's Go network and how that could prevent the next FTX. How can you say that confidently?
Look, we're all excited about the ETF. It's definitely getting closer. We're definitely seeing signals in terms of the conversations that the applicants are having with the SEC. BitGo's working with a bunch of these guys as well. So I'm optimistic, but I think it's quite likely we have another round of ETF rejections before we get the positive news. And it really comes back down to market structure. You know, Gary Gensler's made no secret at this point. You have to separate exchanges from custody. The CFTC market structure is already this way. You have to separate exchanges from custody. The equities markets are this way as well. 15 months ago, we had Sam Bankman-Fried marching all over Washington, D.C., advocating his 7 key points of regulation, where he basically said, let me take on all functions. It's going to be great. It's going to be efficient. We'll do that. Obviously, we have a very different thought process on it right now, but a lot of these applications are with Coinbase custody, and Coinbase, while I'm not trying to say that they're an FTX by any means, they are taking on also kind of that same playbook. In addition to being an exchange and a custodian, they recently got approval for an FCM. Of course, they got a broker-dealer. What this means is there's a lot of risks in that entity that aren't fully understood.
Watching.
And I think that
leave a comment
the SEC
below.
could quite
And
likely come back and say, no,
us on our
you got to separate out these things fully before we move forward.
Follow us at the
Good news,
Crypto Hangout
like
Network.
there's solutions right now of custodians like BitGo that focus 100% on that. We don't do trading and exchange work.
Subscribe button, hit that bell notification. And if you're watching this on Spotify, you can see our podcast on the Crypto Hangout Network on YouTube. Thanks for watching. Leave us a comment below on the video.
El punto es que lo primero que hay que comprender es que el Banco Central es una estafa. ¿Sí? Es un mecanismo por el cual los políticos estafan a las personas de bien con el impuesto inflacionario. El Bitcoin lo que está representando es la vuelta del dinero a su creador originario, que es el sector privado. El dinero es una invención del sector